Hey, 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 hey! Stream starting soon. We're playing with buttons here today. Thanks, great technology, for ending me early. But here we are. It's your guys. As soon as that gets off the screen. Hey, it's freezing cold, and we're coming to you live from my mom's basement. I don't know whose basement they're in. GP looks like he's in prison or something here. But it's your guys. Let's kill the background music there. The Feeding the Ducks. That's what the music's name is. Feeding the Ducks. Thanks, StreamYard. But we're here. Hey guys.
Howdy. Did
all your streams go through to X and whatever, and all that was lovely?
Like it.
Everything worked like it should. Beautiful. So we're here. It's Bags. Ben. You can call me Ben. Jeff DI. Just fucking do it. Nick. He's right there. He's in the center of my screen. I don't know where he is in yours. And then Gotham Jipaisa. I don't know why I gotta throw the extra in there, but hi GP. How's your market day going so far?
Actually having a good day, but this market is just annoying. Like, I don't know why we needed to randomly test the overnight lows yet again.
Oh my gosh. It just goes up and then we complain about it. And it just goes down and we just complain about it. That's just the way it goes.
Yeah, I'm having a pretty good day, except for A-Lab kind of fucking dinged me. Let's just pull in the 10-day here, though. I dumped most of it just for the time being.
Let's start where we normally start, right here on the old QQQ. If I can. There we go. There we are. Hi, guys. There we are. Now we can see everything. You guys see everything? I can see everything.
Yep.
So there's our Qs on the daily. A nice little pullback, and that little fuckery candle there. There's a lot of volume on that candle a couple of Thursdays ago. That was surgery day, wasn't it? It was. That was an awful day in more than one way. And now look at us. We're Ving right out of there. Is that what you guys expected? Not what you expected? About what you expected?
Yeah, I'm trying to keep my mind open, I guess. I don't know. Looking at the NQs versus the QQQ, I could probably still kind of argue a head and shoulders potential.
Oh my god.
But it's just like, I don't know. I'm obviously bullish. I just like it's in the back of my mind, and I'm like, I don't know. I actually tweeted on StockTwits. I thought it would be kind of entertaining if we got, the similar action as that 10-10 candle. And we didn't quite get it, but we did. Yeah. As you're saying, we did kind of V off of there. So I don't know. I think we need to kind of push high. Let me pull up the weekly actually real quick.
Different, but the same. So, is that fair, GP?
Yeah,
we're different as far as structure, the same as it resolves higher.
In what regards?
Just the price action, right? Like we had the big candle on 10-10, and then we had the big candle on 11-20. This was more of a drawn out upwards thrust, and this is more of our classic V shape.
Yeah, so
that has bears just punching air, right? Like I would show you this one, but it's hurt. They're just punching. They're mad.
I think you had a peak above and a peak below, right? The 10-10 candle. So to me, there's a resolution on both ends, bull side, bear side, and then you need to see reaction from there. And the reaction was, give me your money, no more panickins. And we have now closed unless today fails miserably at the end of the day, today will be the third day that we close above the 1010 candle. And you're like, this price action continues. This is what we've been talking about for a few weeks now. The pain trade is higher because these reversions in between, when you see, like, just look at Amazon today, right? Amazon.
I would love to look at Amazon.
Right? Just look at a 5-minute chart, right? Just to like, this is what's going to get people fully.
Just look at the 5-minute chart.
Fully baked out of this market, right? Because it keeps saying this type of price action. Look at that. It massive volume breakout and immediate failure and down. I'm not saying that you care because you're a long-term investor, right? Or whatever it is. But the reality is that Amazon has done this now like half a dozen times. And if you look at the small caps continue, and just look at like a 15-minute chart over the last 3 days on RTY.
RTY, for those that don't know, is the Russell futures.
The small cap futures, right? And literally just mark 2477.1 on that chart.
2477.1. Whammo.
Right? Like, look at how many times we've just failed, tested, retested, pushed up in the last 3 days. This is 2024 highs. And we've talked about small caps. Now small caps have QT ended, right? Like, we're still faffing around with this level. This is the 2024 all-time high, 2477.1. And I like it on a longer time frame, but
yeah, I'm just flashing the monthly up there to give people a reference point.
Yeah, I like it. I still do, but like, what are we still doing? Back testing the back test of the back test, and we can't move higher. And our RTY, small caps in general, the price action goes like this: you need 745 things to go right for it to move higher. And at 742, you get 5 points higher. At 743, you get 10 points higher. At 744, you get 15 point higher. And once you get to 745, you get 150 points higher. There is no in between with this index, because once you get all of the things right, and they all rise together, right? So like yesterday, KRE, regional banks are up. Today, KRE is up. And all of last week, XBI was up. It was strong as hell. And that's been down 2 days in a row now. XLE, which was strong yesterday, is now down today. It is sector by sector rotation, demolition day by day. So it just refuses to go higher. I like the overall structure, but yeah. I think what the price action is beyond exhausting across the board, right? Like, you're not actively trading, but if you're actively trading, if you're not in and out within 10 minutes, you're getting bitch slapped in the face and then bent over like without lube, and you're like, what is going on?
But isn't that what the market is supposed to do, right? It's supposed to wear you out and make you want to give up your shares for cheap. They want you out of the market, right? Ultimately, the chart goes up and to the right. And if I can shake people out or frustrate people for a long enough amount of time, either one, I'm going to get the lower price because they're selling to me, or two, I'm going to get the lower price because I don't have enough people throwing money in on top of this right now because they're frustrated and they're tired of the back and forth, right?
Yeah, I don't this is the pin trade is higher conversation, right? Like,
yeah,
we are going higher. You're going to fight it the whole way through, but this market, we've talked about this quite a few times this year, is the deeper we go into this bull, the less we are driven by organic price action and more by the derivatives market, which is exploding day by day by day. And the leverages, we've talked about the 2X ETFs 3x ETFs, and soon we're going to have the 5x ETFs. This is going to cause even more volatility and leverage across the boards. And then you have this derivative product via ETF, and then you establish options to it, and then you have this level of, and so my theory is whenever the market crashes, which is I don't think anytime in the near future, it's going to be driven by the ETFs, right? These single stock ETFs, these 5x ETFs. Like, there's no reason we need to have single stock ETFs besides people cash grabbing, right, as much as they can.
So one point to that, and this is a great segue, is our homie Matt, Wall Street Wingman, who's going to be on Community Rip Live tomorrow with us at 2 p.m. on StockTwits. He posted a chart yesterday that showed all the bad breath talk was a signal. I'm not talking about halitosis. I'm talking about breadth in the market, right? We had heard nonstop for ages that there's only X amount of stocks pushing everything up. But now we have fresh all-time highs in the S&P 500 advanced decline line. And let me throw that up on the screen. I think that would be worthy to bring in here. I have to remove the chart to add something else. Maybe. If I can do this. I don't know how to do this.
Well, you bring that up. It's like, I know causation is not correlation in these markets, but we're going to touch on crypto later in the show.
We certainly are.
On some of the causation correlation conversations. Like, we can conspiracy theory this thing out, but go ahead, Ben, finish up. I don't see your chart.
You do not see the chart now?
All I see is black.
Where did it go? There it is. There it is. Sorry, there it is. There it is. That's the breadth at all-time high. And the advanced decline is higher than ever before. This is not just a single small number of participating event. We have a lot of names participating. And I think that's the entire point, is we're not being pushed up by just the Momo names. Like, we're being pushed up by a lot of things, whether it's the names that you've been touting for a while, GP, in the small caps that you still continue to think will work, and the mega caps. I mean, I always tout the semis. Semis obviously are doing their thing. Nick, you just got long Soxel yesterday, right? And I think that's paying off for you. So it's not just one thing or 5 things or 10 things that's working. We have baskets of things that are working, and that is not emblematic, in my opinion, currently, of further decline. And we're seeing that from the current price action. That's all I'm saying, GP. I know we agree that we're going higher, but I think unless you're day trading the 5-minute chart every day, which some of you are, I think it's like, don't throw the baby out with the bathwater, getting tired of price action that's jerking you around, on the 15-minute chart. That's all I'm saying.
Yeah, but it's not even just a 15-minute chart, right? Look, like, while the markets go, like, I agree, a lot more things are participating, and you can never win with the bears, right? It was like, oh, it's only Mag 7, Fang leading, and now Fang's weakness, which we'll call, like, and the other 493 stocks are doing well. So, well, because those are doing well and NVIDIA is weak, market's going to crash. You're like, wait, what? What? Right. Like, it doesn't make any sense. So agree that more things are participating. We talked, like, I want to touch on this a little bit later as well, and how awesome 2026 is going to be in not just the markets, guys, right? Like, in the economy. And I think what the markets are going to realize soon enough, and the constant conversation of the market, don't fight the markets are always right. I just don't believe that, because they misprice things all the time, right?
All the time.
Why would you have dips otherwise, right? Like, why were you able to get in such a good entry on Intel? What's that?
Synopsis that I was pounding the table on last Tuesday, right? Mispriced. The market gets things wrong all the time. Anyway, sorry.
Market gets things all wrong all the time, and the market is the most efficient is also incorrect, right? Like people tout these things because they don't know any better, and it sounds fantastic when they called the short or whatever it is, or whatever your ego and your narrative is around that stuff. Well, the market's not wrong, you're wrong. It's like, no, the market could be wrong. It's been wrong nearly on every single dip since the 1920s, but okay. Anyway, so there's a lot to unpack in these markets. If you're frustrated, I wholeheartedly align with you. I'm having a really good day, and it's still frustrating price action across the board because it's hard to find things that are properly trending, right?
Go out and touch some grass.
But Ben,
we ain't got no grass up here. It's snowing.
It's not just grass.
Touch the ground.
Snow,
grab some dirt and love the earth one time.
You're investing, so you don't care. But if people are trading even at 15-day clips or 3-month clips, they're getting absolutely mauled because things aren't necessarily moving, right? Like,
I hear you.
You'll have things that are moving, right? Like Intel is moving today, had a huge day on Friday when we had a half day. So fantastic. But there's a lot of things that have not moved in months since the May 12th breakout.
I hear your frustration, GP.
Yeah, and
Nick,
so
are you equally frustrated?
There's I would say I'm pretty even keeled. My P&L is just kind of churning for the most part. Like I'm not making a whole lot of progress, which has me off the keys basically. Like I'm not trying to like add anything. I'm not pressing hard. So my P&L is just kind of putzing, which I'd rather be in that camp than, like a major drawdown. So I hear GP's point, and I agree. From a zoomed out standpoint, I'm looking at almost all of this as like just your normal backfilling, like your normal. It's becoming an increasingly trade the trader type market, and it's difficult to trade. So like let's say we were talking about the head and shoulders pattern, for instance, right, in the Qs. Those that are waiting for like let's say a legit breakout, like that's not the trade that's working. It's like looking for basically where we saw like let's say like the 10-10 bar and the November 20th bar, right? We didn't quite get it on the 10-10 bar where price undercut the low of that candle, but it was pretty close. We tested the low of it. The November 20th, we did get an undercut. We got the undercut and it rallied and it closed above that low. So it's really, again, kind of back to what I had said originally, like it feels very much like a trade the trader type market. Your typical kind of momentum and breakout type patterns just aren't the play right now. That's not what's in favor. Like you've got to be comfortable buying backfills. You've got to be comfortable buying those kind of undercut and rips. And that's just kind of the way it is right now. And I see both sides of it. I can't say that I'm like in the uber frustrated camp. I would say I am just because I want to see my P&L like really cranking. But I don't get that unless we're like really starting to trend. And I personally, I think we're nearing that point. We're just not there yet. The Qs or the Qs, we're pushing into the 12th week of this consolidation. I added it up on the RTY. I think we're in like the 17th week of this consolidation. I don't really know what the stats are on the RTY. The QQQ and the NAS is pretty much what I try to focus on. And we're in that sweet spot. Like we're in the sweet spot of like an 8 to 12 week kind of corrective sideways chop period. So like, yeah, that's just kind of, that's where I'm at.
Anyway, I'm just saying, just chill, man. Just
for sure. Like
take it easy, baby. I know you got to trade to make money. Like I know, and this isn't just the pain medication talking. This is just some, like, you just got to chill. Sometimes you make more money when you don't lose more money.
Yeah, for sure. For sure.
What?
Sometimes you make more money when you don't lose more money.
But that's pretty fucking deep. But like I read that.
If you're trading because you have to trade and you're making losing trades, you're losing your money. And if you had done nothing but go out and rolled yourself in the grass or the dirt or the asphalt or hugged a tree, you would have made more money by doing that than trading a friend that is punishing you left and right on every fractal.
No, like I said, I'm having, like, even on my trading account, like I was, I'm fine today. It's still frustrating price action, right? Like in terms of having a pretty damn decent green day. This is not even talking about the investment accounts, which are even doing better, right? Like I'm just talking about trading accounts. It does like, this is the causation / correlation issue, right? Like I'm not going to sell investments to pay down my credit card bill. Got to generate cash, right? So it's got to be a part of the process of what we're trying to do here, right? We're traders, Nick. Like I'm assuming you got to pay yourself if your P&L is churning.
I'm not.
It's hard to pay yourself, right? Like,
yeah.
Are you paying yourself by losing, or are you paying yourself by being zero?
We'll know that until the trade is done, my friend. Okay, like well,
I know not every trade's a winner, and I know you're not going to say every trade's a winner. So I trust that your P&L is fine, and I get why you're trading. I'm not. This is not pointed at UGP, and I'm sorry if it comes across that way. It's not pointed.
No, it's not that. I think there's two. This is a time frame conversation. Your time frame is 12 years, right? Like at this point,
I have trades that are swing trades that are going
swing trades, right?
Sure.
And even those, like if you had established swing trades in, let's say, June or September, July or August or September, you're literally nowhere, right? A lot of things have just churned and haven't gone, unless you're catching the entire uptrend for the 3 days that it may happen, right? Like Google was a nice uptrend, but we literally look at ARC, look at Rocket Labs, look at even Intel, massive day, but it took a 30% haircut.
I mean, other than that 9 weeks on the Soxel, it's been pretty easy to trade on a weekly basis. Anyway, moving on. Nick, you started Soxel yesterday. Why did you decide to jump in the semis?
I kind of just wanted the easy trade, to be honest.
Oh!
And I just thought Soxel was the way to do it. I'm like, you know what? I'm like, fuck it. I'm just gonna. I like the setup. I like the SMH, and I like the SMH for continuation. And I thought Soxel was gonna be. I don't know. I just felt like it was the easy trade. I've got initial target at like 58.
I think that's.
But I think
target.
on a longer time frame, I think you could push back up into highs. So like in the low 70s, upper 60s. So I'll probably, pending the trade works out, I'll take a good chunk off at the mid 50s and then kind of ride the rest. But
yeah, I think that's good, Nick. I was just telling the chat. I mean, I was pouring it all in April in those single digits on the Soxel, The one thing I don't like personally about the Soxel, right, is every day it rebalances, it goes to zero, and you're starting all over with a fresh 3%. So as a long-term commitment, it decays your capital, right? Because a down day is down 3%, just like an up day is up 3%. So you got to be careful with that. But overall, I love the Soxel trade. It's been so easy, and I'm not pulling my hair out and worried about, margin calls or whatever else in the middle of the fucking night.
Margin call. Yeah, for sure. Hey, Ethereum's back above 3K.
Woo. Oh, we want to talk about some crypto now.
Yeah, let's do that.
I was just telling GP before you hopped on, Nick, I was this close yesterday. I don't know if you can see how close that is.
In the boat.
I was that close to, well, I did add some, but I was that close yesterday to say, I think we hit the bottom again. But then I realized I was probably over medicated and probably just shouldn't put that out there to everybody. This elbow is a bitch, but today is a very positive day in the crypto market, GP. And do you think you gave me a reason why you thought all of a sudden the crypto market was bouncing? You want to share that with everybody?
Yeah. So in my little private Discord with our group members, people have been trying to fight the trend on crypto, but it's been down, right? And all types of reasons have been floated out over the last month and a half, and no one really could pinpoint why, right? Like there was nothing. There was just inherent pressure, and yesterday's MicroStrategy move was the bottom in MicroStrategy, right? That it's gonna chop around and stuff. That high volume Morningstar candle.
That's the highest volume of the year on MicroStrategy for what it's worth.
And for this to be back at 155, where Bitcoin is still at 90 something thousand or 85,000, doesn't make a lot of sense. But when you're in downtrends, there's nothing that can stop it from until the seller stops, right? We've talked about this. No matter, your technicals don't matter.
Which is rumored to be JP Morgan had the big short on.
Yeah, and so whatever was going on, no one could figure it out. It was frustrating. It was driving people nuts. People making fun of Tom Lee all the time. And then boom, yesterday night drops the big hammer. And you have this Vanguard news to say, after for a very long time poo-pooing on crypto, saying it's not a store of currency, said, fuck it, we're just going to let everyone invest. Only $11 trillion. Oh, here's a discounted value for you, right? And so this is the causation correlation conversation. Maybe one is not tied to the other. Maybe it's just like they're like, oh, look, Bitcoin's at 85. We should let our investors. This is going to be a store of value. Whatever flipped. I think one is related to the other. Personally, I don't think there are any real conspiracies in the market. It's a zero-sum game, and people will do all kinds of things to make money because you lose $1, they make $1. I lose $1, they make $1. And so I wouldn't put it past anyone on that reason. So I'm going with the Vanguard bottom.
Vanguard bottom. I do too.
I love it. Go ahead.
Oh yeah, from like just the Michael Burry and I can't remember who else came out. Oh no, it wasn't Michael Burry. I'm sorry. It was fucking Schiff. The fucking Peter Schiff was chirping a whole bunch of shit about MicroStrategy and Saylor being a fraud, and I don't know. It was some long tweet, and I kind of was like, dude, I think this is it too. I didn't put a trade on Mister, but man, I love the action in both Ethereum and Bitcoin. What I was watching was the high. Does it sound like I'm yelling?
No, you're great.
Oh, okay. These noise canceling ones, I can't hear my voice. We basically we had a high volume low, kind of a capitulation low back on the 21st. and price kind of popped, not on like a whole lot of volume. So I was kind of thinking we were going to come back and test the candle. I wanted to see us hold the wick high, but beggars can't be choosers. But we definitely closed off the low yesterday, which was nice to see. So we kind of we pulled in like within the body of that high volume bar, and it's the setup looks sweet. Like it looks like a higher low, potential for even like you could even probably either a higher low or kind of a double bottom if you're negating the wicks. If we confirm the double bottom, let's say on Ethereum in particular, it would be through 3,100. If we bust that 3,100, not only are we creating or confirming the double bottom breakout, we're also busting the descending channel that it's been in. I have your trend line's a little bit more conservative than the one that I have drawn. But so it looks like from
bottom trend line,
the top one.
This one?
Yeah. So I kind of connected, let's see, what is it? The October 7th high through the November 3rd high. And then that's kind of in alignment with like the November 11th high as well. So it's a little bit more of an aggressive,
I can see that
descending trend line.
I wouldn't say that's wrong.
Yeah. I mean, again, just perspective. And so like, anyways, like in thinking of like areas of confluence, reclaiming that 3,100 would be huge. And on top of that, that would be reclaiming the low of another high volume candle, which was the November 4th low. So there's a lot of positives to seeing us reclaim and break through the 3,100. From there, we're obviously pushing up into the 200-day. Hopefully can kind of like, I don't know, flag out or something and kind of get the shorter term moving averages to finally start curling up, because within this whole descending channel down until the last, I don't know, let's say 1, 2, 3, 4, 5, 6, 7, 8, well, the last 10 trading sessions, have we actually gotten the short term, the 10 and 20 period moving average to actually like flat, like to somewhat flat line. So if we can push, like it would look phenomenal. And I think everybody in their mom would be like, yeah, that it's setting us up to kind of push back into highs.
Yep.
It's kind of the same thing, like looking at Bitcoin, the price action, like the bar that we're getting today, I would define that as an igniting bar, an igniting candle. And if you look back,
even with volume that low,
yeah, day's not over. We were easily more than halfway through yesterday's volume. Not sure if we'll exceed it. What the volume signature, the reason I like the low volume is because what it's telling me is that as price came back into the high volume low, it didn't have the volume there to push it lower. Like volume would have had to really come in and ideally exceed the volume of that high volume low on the 22nd to kind of push us into another leg lower. So like Bitcoin, it kind of, and coincidentally, looks very similar to kind of the price action earlier this year, kind of the February to April-ish kind of, I don't know, slop under the 200-day, like, I don't know, whatever you call that price action, but you can see those big wide range candles acted as an igniting move, which ultimately led to the run from 75,000 up to 100 plus. So I don't know. I'm loving the Bitcoin, or I'm sorry, the crypto in general. I'm liking the price action here. I guess we'll see how it plays out.
Yeah, I'm very similar to what you guys were saying as far as just the nonsense. I posted a little bit about this last night over on StockTwits and over on Twitter that the bears are out, right? They're out chest thumping. They're out. I told you so. They're giving ridiculous price targets anywhere from 0 to sub, 5 figures to 30,000. You throw any point lower than here, and you are bound to see it yesterday. And that usually signifies some over exuberance. And we know how that usually goes on both ends of the spectrum, right? When bulls are chest thumping, usually, they're not long for this world.
I don't think
I use a lot of different. Go ahead, Nick.
No, I was just going to say, I think everybody that leans to the technical side is pretty much in the camp that like 60 to 70,000 would look phenomenal. Like, like it would look great. It would just look like a breakout retest, especially on the larger time frames. It's just the shorter term and like it's almost like the incessant annoying perma bulls are just as fucking annoying as the like incessant perma bears in the crypto space. Like you don't really 100%. Get that as much, I don't think, in like equities. You get, I feel like a very the bull side is it's like it's healthy optimism, where the bears it's like perma bear Armageddon kind of thing. Where crypto it's kind of like the extremes on both end I find to be equally as annoying. But
yeah, for sure. Yeah. I like to do my normal couple times a month look at the Pi cycle top, which is a confluence of moving averages that have signaled every Bitcoin top. And I've been saying for months, you guys have heard me say it right here and on the Community Rip Live, that this cycle feels different, right? Like for some reason, this cycle feels different. So I was looking at the Pi cycle top, and if this is the top, it's different than every other top technically that Bitcoin has ever gone through. And you can go look at my X and find the chart. I'm not going to waste the time to pull it up here. But through every bull cycle, there have been moments where Bitcoin's price has breached that lower moving average. The thing about the Pi cycle top is when the top moving average crosses over, that's the top. That's the Pi cycle top. That's the top. And we haven't experienced that at all. We haven't even come close to the top moving average yet. So I was looking back through all the other tops to see where Bitcoin price lost that lower moving average. And it's littered through cycles of opportunities where price dipped below that lower moving averages to do nothing but rally back above. And I'm not saying this is the move before the top. I'm just saying if you're a believer in what that indicator tells you, there is a likely chance of Bitcoin racing back above 100K, if not higher, soon. But there are differences. There's differences in ETF flows, right? There's differences in how much participation is in the market via the ETFs. So there could be reasons why the highs didn't go as parabolically high, right? Because now it's institutional money. Now it can grind as opposed to just shoot up like a rocket. So I'm not saying that Pi cycle top is right. I'm just repeating what I've said for months, that there's something different. And if this was the top and we've experienced the top, Pi cycle is also indicating it's different. And that doesn't mean that Pi cycle is going to last forever. But at the same time, something's different. As far as me and my trade yesterday, when I thought it was the bottom, I saw all the, this out there, the blah, blah, blah about how everything crypto is so cooked. That's a dead giveaway for me, usually for at least a short-term trade. So I was sitting with my ice pack on my arm and I was like, what the hell? Let's buy a little of this and a little of that. I didn't go heavy, because I wasn't that convicted at the time. But I like it. I like it here. I like to see the price action. Like you're saying, Nick, I don't know if I'm ready to call it an igniting bar today. But that's a huge turnaround. GP is exactly right with the Vanguard. The law was passed that, these retirement and investing accounts can now custody cryptos. Vanguard's leaping onto that. Vanguard, obviously, we all know Vanguard's one of the largest, resources of capital out there, or custodians of capital out there. So I'm not surprised. I like the tailwinds we're seeing. But if Bitcoin can't get back above 100 to 110K with some speed, the Bears might not be wrong just yet. So anyway, well, one thing I want to talk about, and I know we're running out of time, we only have 15 minutes. Gosh, this show has flown by, is bottoms. And we've touched on that through this whole first 45 minutes of the show of bottoms. And bottoming is a process. For the last 3 years that we've done this podcasting thing, we have talked about this at length. Rarely are they so clean that you get one wick that shows you it's a completely straight V. But to me, when you see, and this is Bitcoin, I'll just use Bitcoin for now. When you see stuff like this, right? To me, that's a sign of we're trying to confirm a bottom, right? We've gone above the first moving average. We've hit the second moving average. We lose it, and then we come right back. So stage 2 for me for Bitcoin is you got to get over this, and we're looking at the daily. You guys know I hate the daily. But you got to get over this 20 daily moving average. You go to the weekly, it's obviously much more damaged. I like the 4 hour in particular, where we're already over all 3 of the moving averages, and we're coming up on the 200. We could go to the Qs. For my money, same thing, right? From what happened Thursday ago, had price stayed down here, that would have been bad, right? You would have had everything rolling over. But within 3 sessions, where are you back at? Everything is repaired. So it's all the wounds are healed, so to speak. And you can go through the charts. And this is what I do, is I try to find where we're getting those overperformance spots. I don't know how you guys go look to find your bottom. You guys are much earlier on picking bottoms usually than I am. I don't always want confirmation, but I like to see at least some strength come back before I'm ready to go. This is the time to buy.
Yeah. I subscribe largely to kind of O'Neill's, capitulation bottom with kind of naming it as like a day 1 rally attempt and then looking for kind of a confirmation follow through day, which, going back to April, when we were talking kind of about the Qs and kind of that V out and how that worked, I largely layer it with fibs. And so, once it starts to look like we are going to be building out a bottom, or we do kind of get that follow through day, the Qs, it was kind of I don't want to say unique, but it was with how big of bars those were, like on whatever day that was, April 9th, it was really easy to throw fibs up from the capitulation low to the high of that candle. And what I wanted to see ultimately was, I didn't want to see us negate the 50%. Like, I didn't want to see us undercut the 50% from high to low of that range. And we got one. We got an undercut down to the 0.618. We bounced like a motherfucker right off of it the following day on that turnaround Tuesday. And it was like the race is on from there. And so if you weren't like, again, kind of sitting in if you weren't letting fear consume you, and you were letting that massive igniting bar, the follow through day, whatever you want to call it, kind of guide you, it played out well. So I think you're right. It is a process. And I think what we kind of talked about back then, the biggest thing about that April bottom was having the knowledge base within technical analysis and how many tools you kind of have in your tool belt. It's all about, for us that are for technical traders, like all we're trying to do is like stack our odds, play if thens while we're managing our risk. Like that's all we're really doing. You know, I love it when, like, you know, people on StockTwits like do the line squiggly things and like, you know, it's all a bunch of, you know, voodoo, but it works. Like if you're layering it, I don't know, it works. I don't know. I kind of started to go on a
Nick, and GP, you're a big volume guy here at the trade station. But in April, when you guys were saying the bottom is in, I'd already made my bet on Broadcom, right? But I started throwing money in the Soxel because look at that volume, right? And I don't always use volume as my indicator, but in April, like, just look at that crazy volume. You can go all the way back in time. How long did it was 2022 since we'd seen that type of volume, GP?
In April. Yeah. It's hard to like, oh, go ahead.
No, go ahead. It's fine.
I was going to say, so in the current state, we're not in a trending market really in either direction. So it's very difficult to like, again, if you're in perma bear camp, well, you know, you're just kind of fucked. But if you're not, and you're kind of in like, all right, we're in, yes, it could be a head and shoulders, but really it's just range bound behavior. So if you are longer term bullish, you'd be looking at the current range as kind of like just either looking to like tighten up or lay off the gas when we're at the range extremes, because we're not getting a whole lot of follow through in either direction. That's what a range is. So in uptrending markets, you want to see weak opens, strong closes. In downtrending markets, you generally see, you know, strong opens, and then the closes get faded. The closes get faded. And over the course of the last, let's say 1, 2, 3, 4, 5, 6, 7, 8, basically since that massive puke bar on the 20th, that's kind of what we've seen, at least in the Qs. We've seen decent opens, weak mornings, but for the most part, pretty strong closes. Even yesterday, we saw a weak open. I was a little hesitant yesterday, thinking that we were in a very precarious spot. And if we didn't hold the high of that puke bar, I'm like, I really don't want to see price get back within that. That was my skepticism. And we obviously didn't. We pretty much rallied right off the open. And it was considered a red day, just being that we didn't exceed Friday's high. So in the idea of like a weak Monday to a turnaround Tuesday, we're kind of getting that. Granted, you know, the action today is pretty kind of fucking nasty in some names. The indices are still look fine, but I don't know. It's like, I guess my point was just that when we're in a sideways market versus like a definitive up or down trend, it's a little bit more difficult to say like, hey, I'm looking for a capitulation low with a follow through day. I think a lot of growth investors are probably in the camp that we don't actually need a capitulation low. They're still playing off of the April low they're still playing off of the April capitulation low with the follow through day. So sure. I don't know. Yeah.
GP, the floor is yours. I love what you said in the chat.
Yeah, it's like bottoms are a process. Don't get me wrong. I think bottoms are a process that requires for you to have a process. It's volume is not the key about the conversation. The volume is where it tagged, where it went to, where it reclaimed, where it did a lot of things that you would expect on that high levels of volume. Let's say that April 7th bar was massive volume and it just stayed down there, right? On that massive volume. There's no way that's a bottom, in my opinion, right? That's you got to this level 25% below 2 months ago and it couldn't find buyers, right? And the goal was to see that it found buyers. And you usually get it's the peekaboo bar. We talk about this quite often as well, is when you have candles, if you're looking at monthly, weekly, daily, and they peak above the prior low or the prior low, that's telling you that price exploration is happening, and price exploration is happening on the downside there. It's like, okay, well, let's see if there's demand down here, right? Oh, there is demand here. Boom, buyer step in, take it higher. Same thing with price above, right? If it goes above and reverses lower, this is why people put so much emphasis on bearish engulfers and stuff like that. But bearish engulfers, bullish engulfers in its own space are useless, right? But in the scheme of what's going on, like if you got a bearish engulfing after a 50% uptrend, probably something to put on your attention span, right? In terms of, okay, well, this could be potentially a short-term top or whatever. But if there's no follow through, then it's a one-day event ultimately. And a lot of people are talking about hanging mans and stuff like that. And I'm like, the analysis is not a one candle conversation. Never has, never will be, never in your mind should be the be all end all on the tops and bottoms, right? And so like I'm short Google while this market is trending higher. Why am I short Google? Because Google did what we do on the bottoms. On the tops, they put in capitulation tops, right? And they do it on heavy volume, and it's panic buying. It is the overnight 10-point gap ups. Google barely moves $3 a day. Look at it. It's down 6 cents today, right? Like it barely moves, and all of the last couple of weeks, it's been rocketing 5, 10, 20 points. Those like that's volume, but it's also the type of volume that's coming in, right? Like this almost panic level buying. They're basically locking you out, forcing you to chase higher, and they're distributing to your ass, right? That's what's going on here, even though it feels like it's going higher. And so like tops and bottoms are both processes. We've had this conversation before, but if someone was talking to me, it's like, oh, do I sell the markets? Like, are we topping out here? The markets don't top out on a single candle. Markets don't bottom out on a single candle. Most markets, if you look back at history, have topped out over a period. It goes sideways, usually for 3 to 6 months. They have to distribute out. They can't unload to you, the retail investor, unless there's a period of going sideways. Even 2022, we topped in when did we top? We topped November 21st, 2021, right? It wasn't until January 4th the calendar flipped where we had that bearish engulfing after being sideways for almost 3 months, and that was the start of the big bear market, right? Like it's you got to see the entire picture in these conversations versus calling tops and bottoms. MicroStrategy yesterday was most likely a bottom. Doesn't mean it can't retest, can't do price exploration underneath that level. No, it still can. But that was capitulation on sentiment. It was capitulation on volume. It was capitulation on price levels. And what it did was it tagged the I think some pivot and then reclaimed it. And that was the other part of the conversation. It's like intraday, it reclaimed those pivots. And today followed through, right? And not a great follow through. I would have expected more, to be honest. But that's a Morningstar reversal, right? You have this hammer candle that's basically an island baby, right? Underneath the level, underneath the recent levels, reclaimed the recent levels, and has now pushed higher. So there's so many different levels, and sounds like we need to do another podcast to talk about
on just bottoms, because all
setups.
Yeah, and Za in the chat said, "Wouldn't a V be an outlier?" I think there's outliers to anything, and I think there's also looking at different time frames to help determine that. Like it might be a perfect V on a weekly or monthly, but there were signs on the daily or 4 hour. But GP, before we run out too much time, I want to give you some time to talk about 2026. That was your baby. That's what you want to talk to. So what are you looking at for 2026? And then Nick, you and I can follow up with what we think.
Yeah, so I think 2026 is not necessarily. I think it's going to be a great time for the markets as well, but I think it's going to be even a better time for economies, right? In our particular economy in general, we have had a Federal Reserve that finally hiked rates in March of 2022,
Late.
at nearly the height of inflation, right? This great Fed. I like Jay Powell and stuff like that, but all that told you, yeah, data dependent on data that's wrong, right? Like, and he's still data dependent on data that's wrong. And you're like, dude, we get it. You don't know what the hell's going on. Got it. You're as clueless as we are. You might know some more plumbing and mechanic stuff, but all that tells you about 2022 was it wasn't monetary policy that caused inflation. It was structural. It was shutdowns and stuff like that. So we've now mean reverted. Their rate policy stance has been a nightmare. And from what I mean by nightmare is they've had it controlled. It's nice that they've had it controlled, but they have not given any direction to what this country strives on, which is small businesses. And small businesses are our lifeblood, are our roots, are our fundamentals, and they need clarity, especially the ones that are still here right now, because the ones who didn't figure out that monetary policy was shifting, Beyond Meat, Forever 21, the list can go on, Nicola, the list can go on and on and on of all the free money companies. Management couldn't figure out that they needed to shift their policies, or the business didn't allow it. So for the companies that have survived through this topsy-turvy monetary policy, need to be released into the wild so they can execute and the only way out of debt is growth, right? And organic growth and meaningful growth. So my 2026 prediction is it's going to be led by regional banks. We've talked about this multiple times over the years. It's sitting at 2007, 2008 GFC highs. There's a beautiful consolidation on multiple time frames happening versus that pivot. So regional banks are our lifeblood to our small businesses. So look for real world economy stocks if you're looking for positioning in 2026. I think a lot of the growth has been captured by mega caps. So I'd be looking in real companies like, I don't know, Rivian looks great. Exxon looks pretty damn good. Regional banks look really good. My favorite is FITB. And I would look for how AI impacts the real world and its benefits to it, and look for stocks and charts that represent that. Don't go buy something that's been in a downtrend for 4 years and can't get itself out, right? Look for stuff that's reflecting what your thought process is. And so that's what I'll be doing over the next month, taking time to find charts that represent what I'm theorizing. And if I don't find any charts that theorize that, like in vast amounts, then I'll shift what I'm thinking, right? But that will be my task over the next month, and I'll share on our podcast here every so often if this is gonna continue to push the same way I think it's going to.
Let's set our Christmas special around on what gifts we're giving each other for 2026. How about that?
Yeah,
that sounds good.
How about you, Nicholas?
Yeah, from a technical perspective, I think that the SPY in particular is getting ready to kind of go on a run to 1,000. Short term on the Qs, I think that like I got a target just based on the range of the last year or so. I think we're going to push up to about 700 before we kind of see a little bit of consolidation. And then if you're looking at like the RTY, I mean, like, fuck, it looks so good. It, I don't know, you could tag another probably 1,000 points on that sucker. I think it's going to be a massive year. I would be looking for a lot of names that are I am too, GP. I'm going to be spending a lot of time looking for like massive fucking bases, like stuff that's either stage 1, stuff that's kind of continued to show, that's been already trending but is below like its all-time high. I want to see like that kind of nice range. I'll probably steer clear of like, I'll keep the names that are extended that are just kind of trending on my watch list. Like I'm not going to disregard them because I would be looking for like continuation trades. But I want to be buying like fresh stuff. I think it's going to be a year of like throwing shit at the wall, like just gunslinging. I don't know if that's like overly optimistic and I'm trying to like rein myself in.
Can't be bullish enough. We've talked about this.
Yeah. I mean, maybe we should switch the slogan to like, you're not optimistic enough.
Okay.
Like, I mean, bullish, sure, but bullish just implies that like right now, like, it implies that like you should be all in, levered to the tits like right now. And I don't think that's necessarily the play. I think it's probably dream scenario is probably seeing some chop into the new year or put like right after the new year, let the dust settle and hopefully find some type of, I don't know, what are the setups that come in like February, March? I don't think like everyone should be sitting real pretty right now, I think. At least if you're on the long side.
Well, I mean, players fuck up too,
True.
Not everybody to the long side's fat and happy, so to speak. For me, I've been taking the entire second half of this year working toward being where I want to be for 2026. So the movements that I've been making in the portfolio for the last several months has been where I think my shift in focus is. GP referenced my 12-year window, and that's by design. I basically have a 12-year runway that I'm looking at my long-term investments in my long-term account. And that doesn't mean I hold everything that I have for 12 years, but I'm basically creating a vault, so to speak, of stocks, and you can call them your core or your anchors or whatever, that either I find are leaders and their themes are going to continue to lead, or they have been wildly mispriced and now is a value opportunity. And then the second part of that, you can call it a barbell approach if you want to. I don't really look at it like that. I call it my torque, right? There are always companies that are sister or brother trades to what those anchors or vault positions could be. So I don't see myself wildly deviating from what I'm already in for the coming year, but probably expect more concentration and more opportunistic stock trading on some of those torque names and going heavier in when I feel those vault names are mispriced. So that's what I'm looking at for 2026, and I can share more about that later. But without getting too long-winded about 12 years from now, we'll just keep it pretty simple. Anyway, we are out of time. Great show, guys. I love it when this hour flies by and we stay with each other just a little bit longer. Nick, I'm going to start with you. Any last words for today?
We're into the last month of the year. Don't waste your time waiting until the new year to set all your dumbass resolutions. Like, the time to start and the time to get after, it's like right now. Like, there's no better time than right now to
right fucking now. Just fucking do it.
Yeah, let's go. So
GP. Oh, sorry, Nick.
No, I don't know. That was it.
That was it.
Yeah. Just technical.
I thought he was gonna say just fucking do it.
No, just technical. Stage 1 bases are soul sucking bases. You rent in the stage 1 bases. You own in the stage 2 base breakouts. That's like just from my experience. That's when you want to own. That's when the trend shifts. That's when you get that shallow pullback moments, and you get to enjoy that game. And that base breakout maybe 6 months from now, 10 years from now, whenever that is, that's the you know how we talk about meats of moves? That's the meat of the move. And it's not about just the low price that you bought, but it's also about the mental capital you save. And Agreed. So just make sure that whatever you're doing, your number one saving routine for 2025 and 2026 is your mental capital.
I don't know. I picked some pretty good stage 1 breakouts in my time, so I don't disagree with you though, GP. My last word, and it's not really. I've been funny the last few episodes, but you know, I used to be indecisive, but now I'm not so sure. See you tomorrow, 2 p.m. StockTwits Community Rip Live. We'll see you there. We can't wait, and have a great rest of your trading day. Peace out.